Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. Yes, we still do the recap every single day, but it is for Redler All Access. And at this point, I feel like with the volatility and with the major moves we've had, I'd like to just put a video out there, just giving you guys a little bit of an anatomy of the trade and how to think and how to interpret some of the languages that I use, because I do post a chart of the S&P every single day in the public Twitter feed, even though in the private, I go over 10, 14 different stocks with an actionable approach, usually the best ones out there or the fastest moving ones out there, whether it's Apple, Amazon, Facebook, Tesla, Netflix, Baba, Baidu, Twitter, you name it. There are charts every day that are not on the public feed, but they're on the private feed with, my note, etc. So anyway, let's just go right to the chart of the S&P cash, because I want to talk to you through some of the language. Okay, here is the S&P. This was that ascending channel. My strategy that you always hear me talk about is if you're above the 8-day moving average and the 21-day, you are in portfolio approach, holding about 10, 12, 14, 6, whatever amount of positions you can. Right here, the trade changed. This was your gap down. This was your gap that didn't get filled. This was your reduced positions. Okay, then we stayed about below the 8-day for the first time since the start of the year, telling you something changed. You could have got out here or could have got there. PS, broke the 21-day, broke the 50-day, and then right here is when we had a red dog reversal at the 200-day. So when you get a reversal day, okay, a red dog reversal or an outside day, sometimes it's an inflection point, sometimes the trade changes. From there, we had a freaking awesome move up to 2.9 lows. You go back to the chart and you'll see this day you had a little bit of follow through to the red dog reversal, which is always nice because I typically take home a third long after that. And then the question was, would we then go sideways, okay, right here, and then continue to bounce, okay? And then how would we handle the moving averages there? We always talk about, can we reject the moving averages or get back above them? So right here, you had your red dog reversal, held higher, looking good. This is your spot. This is 26.68. This is 26.72. And then what happened next? A nice trade above that level. So far from the bounce back, you had trade 1, digestion, pretty much trade 2. Okay, then I think you had another day into the moving averages. So right there, that's a nice bounce back. If the bears were going to reject price, they probably should have rejected price somewhere around here. Okay, prior support turns into resistance usually, and instead we penetrated above it. So now the question was, would we digest above it? So then fast forward a little topping tail, another little bottom tail, another little bottom tail. This one was decent. So the question was, would we then be able to hold higher and continue and penetrate into resistance? Where would resistance probably be? Somewhere around one of the levels we broke down from, or maybe even below it. And then if you remember, this was Friday. Okay, that gave you some clues that Monday could be a strong day, right? We started to resolve higher. And then this was Tuesday. Wow, look at that. From the ascending channel break to below the 8-day, the 21-day, the 50-day, red dog reversal right here, digestion, push, digestion, another push. What did you know coming in on Tuesday? All you knew is 27.80. Could we push again into bigger resistance, or is 9% off the lows enough? So then what happened here? Looky. A red dog reversal on top of an outside day. What do I mean by an outside day? Well, here's your red dog reversal. What's a red dog reversal? Pushes above a prior high, which was 27.80, made a new high of 27.89. That's over here, by the way. Look there. Okay, so that's boom, boom. Reduce some of your longs. If you happen to be in long, again in here, after it proved it could hold higher, why not reduce there? Some guys have said, hey, look at this, all the way from this, red dog reversal down to 25.80. Now we're up here at 27.80. Holy cow, I'm getting short. Okay, if you did so, then on Wednesday what happened? You had a small bounce, got it rejected. Did it reclaim 50% of this bar? No. So that was the commitment to this outside day, and then we broke below Tuesday's low of 27.44. Then what happened today? I figured, hey, maybe we hold 2,700, right? That's last week's support. I don't know if we're going to hold it. I don't even know if we're going to hold Friday's low. Not Friday's low, I'm sorry. Yesterday's low. Let's get this way. Okay, so coming in today, I was like, okay, we have this low here of 27.13. We have 27.01 or 26.97. If that breaks, the next spot is kind of where we broke out from, even before then, right around here. So the strategy is, okay, red dog reversal day 1, followed through day 2. Do we get a day 3? In order to have a day 3, it's got to get below 27.13 and stay below. Can we hold here and reclaim this? We tried it early on, didn't work, and then all of a sudden, boom. So that's the anatomy of the move. Then, what you want to do is lay on top of, what's tech doing, what's the banks doing, what's, the small caps and energy doing. You have to think about all these things, not just what the S&P cash is doing. Okay, if you look at the Qs on that Tuesday, okay, also did like a double top, right? Came back up here, couldn't quite get up there, did a small red dog reversal. What's a red dog reversal? You push through the prior high here of 170.40, come back below. Also what happened here, it traded below the prior day's low, so showing you some power. Next day, bounce got rejected, and now all of a sudden, here we are down at the 50-day. Okay, that was after, obviously, a really beautiful move from holding the 200-day, so it held above the 200-day where the S&P went below, so it showed you relative strength. So from here, nice trade, and now you had a 3-day move. So what do we know today, tomorrow? Coming in tomorrow, you know what this low is, 163. What will you hear me talk about if we're up a little bit? Tech just pulled in 3 days, held the 50-day. You could try and be long verse 163, breaks 163, you're going to probably see a lot more downside. Also coming in today, there were 3 stocks that were kind of strong and holding near highs. That was hard for the market just to have these 3 stocks near all-time highs, extended from their 8 days. Think to yourself, what were those 3 stocks? Okay, that was Amazon, that was Apple, and that was Netflix. Okay, so those 3 stocks, figured if those gave way, tech's going to get hit, and then we probably get downside follow-through in the S&P. I have no teleprompter in front of me. I just know my levels so well. I can just tell you what they are right now. Amazon had 2 days supported 1507, breaking below that. Psychology probably to the downside. Netflix, I think, was 190.50, and Apple was 178. So first, Amazon did it. What did Amazon do? It broke its upper flag, which was hanging there. Some guys actually made some decent money short. And now you have to see what happens here next. It's still above the 21-day looking fine, but that little momentum trade is kind of out of the way, so we'll see what happens here. Then you go to Apple. Apple was crazy. I was actually long it, and thank goodness I got out of the way. I was long it thinking, hey, maybe we get back above this. If the market wants to rally, it's going to have Apple. Was a little bit concerned with the 2 topping tails after a big move from down here. And a lot of nice trades along the way, but from like 156 up to 180, you couldn't do it. So right here, 180, what was this? No, 178.05 was my big level. I bought it early on, made some money, held it, then right when it broke 178.05, I tweeted to my Redler All Access, I'm out of Apple. It didn't hold 178.05. I had no idea it was going to come all the way back down to here, but you don't have to know. It was an air pocket. Okay, if you look at the 5-minute chart, look how fast it happened. You go to your 5-minute chart, that's why I prep. That's why I'm up at 4:45 in the friggin' morning. Okay, you look here, this was the spot. Going sideways, then broke this spot and boom. Some guys probably said, hey, I'm going to short this thing. It's only $2 off highs. The S&P is now below the 21-day break in the 50-day. There's not much leadership. It's getting more narrow. It had a huge move, and they made probably money short. Okay, and then you had a lot of little bear flags. Bear flag, continuation, bear flag, continuation, until finally bouncing up. So now, Apple's a little bit different. So what do we do with Apple now? This is what you know. It's still better than other names out there, but you're not looking for a new high trade anytime soon. Now it's going to have to rebuild, and you could be a buyer versus spot as the moving averages catch up. And if it hangs in here, not the end of the world, then maybe it tries again if the market's not heading for a W type of retest of the lows from February 9th. Okay, then you look at something like Netflix. Netflix too is best in breed, but it also, actually this still held in there pretty well, held the 8-day. All right, so all in all, there definitely was some clues that today wasn't going to hold when the last batch of leaders got hit on top of the other ones that were weak. And my note I talked about in the video as a short. Ooh, yeah, Red Dog mentioned this as a short. Why? Because you had a wide range bar that didn't get cut into halfway of it, and I figured it looked like it was vulnerable. I think it was a 240 and change. Again, no teleprompter, just that's the level I remember in my head. I can't remember to take out the garbage, but I can remember levels in my head. Oh, look, there's that level. Because I write about it, because I chart it every day. Here was that wide range bar. Never made a new high like some others did. Here's a small little, topping tail, and then this was a short versus a long. And now we'll see what happens here. It's coming into the 50-day, but no one, no reason to get caught long this when this is happening. Some of you guys could have made your money short, and I think some guys on the VTF did. Then another clue is JP Morgan. The banks were strong. JP Morgan was the only bank that was strong that made new highs. Every other bank didn't, except for Bank of America tried and it failed. JP Morgan also did a red dog reversal. Ooh, what's a red dog reversal? I'll show you. You guys know. You go here. This is a red dog reversal. Traded above a prior high and couldn't hold it. That's a sell signal. If you were long here with the relative strength, because look, this didn't even make a lower low on February 9th, or when it reclaimed the moving averages, you know, it had to be a little skeptical that this is the only bank making a new high. So on this day, you could have got out of the way and might have went sideways and held a prior high. Instead, it tried to bounce, broke below this, and that took out some of the gas of JP Morgan and the momentum in, you know, in JP Morgan. 117.35 was the chart I put on Redler All Access. I said if it breaks below this, chances are, you know, more leadership's failing and we're going to be in a little bit of trouble. Now here you are 3 days later into this spot, and we'll see what happens tomorrow. If we open up, you know, I'd say that JP Morgan just had 3 days from the red dog reversal around the 118.90 pivot. You know, see if they try and bring it in. If it can't break this, maybe you get a little bit of a bounce. But it's below the 821 day, so take a little care. Yields are coming in a little bit. If it opened lower, say, hey, JP Morgan just went through the 50-day. Let's see if it could hold the 50-day, take back the prior low, give you a small red dog reversal bounce, especially if you didn't get caught in the downdraft. So when you're tactical, you're tactical. When things break the 821 day, you reduce risk. When you get a red dog reversal outside day after a massive run, you change gears. Okay, you map things out. If this happens, then do that. If that happens, then do this. And be very flexible and also have stops. I tried to be long today in the morning. You know, I was long, you know, some Apple, I was long some Twitter, I was long some spiders versus that 270 thinking it might hold. It actually gave me a trade. But then once things looked a little bad around 11:30, I said I'm going to put my stop in at the low of the day. Boom, that saved me 4 points in the spider, you know, or in the spiders. And then at the end of the day, I was able to play a bounce. But once this didn't hold, get out of Dodge. So now it kind of came into here. I'm long a little bit overnight, a little. Okay, here's your red dog reversal there. Obviously, this was a great trade down here. Remember that tweet I said I'm buying it versus a 200-day right around 130? Well, that was a nice trade. But anyway, here we are. It's definitely a little broken. Maybe we could bounce, so I'm very small because, again, I didn't get caught too much in this. Here we bounced up again, got rejected at the moving averages, so now we'll see what happens here. Maybe it'll try and hold 266, come back here. We'll see whether this gets reclaimed or creates a little bit of an H cell, and then, you know, who knows, maybe, you know, this V, which we did have a V. The V was working, okay? You know, now to me, looks like it could be a W. Maybe it's this type of W, I mean, with a higher low, or, you know, breaks this and creates this type of W. Nobody knows. All you know now is this. Today's low, 266, is the thing we trade against tomorrow. Same way yesterday, all you knew is this low. The day before, all you knew is you had 1 day to take notice. Would it mean something? And it did. With all that said, I hope everyone's navigating it well. The market was in a great portfolio approach December, January. You had, you know, so much participation with every sector. On the last bounce, you didn't get a real bounce in the energy names or the small caps or the bios. You just had mega cap tech and some banks. So could have left you a little bit, you know, on your toes about it. And then you had volatility hit. We broke the ascending channel. We had the red dog reversal, crazy bounce from the February 9th lows that showed commitment to Tuesday's red dog reversal sell. Now here we are, a little bit in flux. And if you want some help figuring it out, I have a Redler All Access Twitter feed. It's only like $10 a month, you know, and you get all the charts. Or, you know what, you subscribe to my note. I do it every single day. It takes me about an hour and a half each morning to do them up at 4:45. It's my game plan done for you. You see my positions, and I do it every single day as real time and current as possible. Hope you're doing well. Tomorrow's Friday. Have a beverage tonight. See you soon.